Fantastic. Well, good afternoon, everyone. Thank you for joining us for our webinar today. It is the top of the hour. We'll get going here in just a moment as we let folks get situated and trickle in. My name is Ben Herring. I'm the Director of Partnerships with CU Collaborate. I'll be here helping to moderate and facilitate a Q&A session after Chris's presentation here. So as you're taking in the presentation today, please don't hesitate with your questions. Feel free to throw them into the chat or the Q&A section, which should be at the top of your screen. We will have an open conversation once the slides are done. We're also recording today's session, so you can expect to see a recording in your inbox in the next 24 hours. Once we've finalized our webinar recording, you'll also gain access to our slides, as well as, of course, contact information to connect with us with any questions, or if you want to dig into any details around what we're going to be covering today in the webinar. So with that, we're just about a minute past here, and for sake of time, want to dive right in. Happy to hand it over to our Chief Operating Officer, who wears lots of hats, including this one, Chris Tishu. Take it away.
Thanks, Ben. Thanks all for joining us here today. As Ben mentioned, I'm the Chief Operating Officer here at CU Collaborate. I also lead our consulting practice, and within that, our merger practice, and that's that last hat that I'm excited to wear today and chat with you a little bit about, just what the NCUA's merger requirements are. With these webinars, we've kind of found that like 15 to 20 minutes of prepared remarks is best to leave time for Q&A, are the things that you all feel are most appropriate. So I'll try to stick to that and have you out of here on time. Want to set the table briefly just around sort of like mergers in general and the broader merger process, because we're really just focusing on, we have a merger agreement, we're ready to apply to the regulator, and the key considerations there, most of which is just the merger package. It's not enough time to get into detail on each of the 20 or some odd bullets that would go into a merger package, but as Ben mentioned, we do have some I have some appendix slides that we'll be sending out here that have links to resources that will allow you to dive deeper. And then, of course, we would love for you to reach out if you have specific questions on any of these. I'm very fortunate to have a team here to help out. We're happy to deal with your specific inquiry and dive a little deeper in a one-on-one conversation. Before I jump in, for those of you, I see there's some friendly or familiar names, on the call. So thanks. Good to see you all again. For those of you that aren't familiar with CU Collaborate, we are a QSO. We really blend both data analytics via our software platform and professional services people to really try to achieve outsized outcomes for credit unions. We're a QSO, as I mentioned, and then we do focus really on sort of like regulatory matters and strategic matters as well, field of membership, chartering, low income designation, CDFI, mergers, and a myriad of other exciting elements of our business. Real quick, just to set the stage, for those of you that haven't been following, general merger trends, things have been, quote, like consistent in terms of the number of credit unions that have, chosen to partner up with other credit unions really in the last like 7 years. I think there were about 4,300 credit unions in the country at year end 2025. 157 merged away in that year, and that's been pretty steady state going all the way back to 2018, and is about 3% year over year of the total industry choosing to merge away. Interestingly, we did see, we are seeing a trend towards like larger, more sort of quote successful credit unions deciding to partner up for strategic or like scale reasons. So that continues to be somewhat of a shift in the underlying data. But also like the average asset size of credit unions is generally increasing as well. So some of that is just inertia and compound growth as well. Expect 2026, understandably, to be similar to that, and that means that if that's the case, approximately 160 or 320 really credit unions will be looking at specifically the merger application process. Many more will be in some portion of the merger phase, and so I did want to, before diving into the regulatory requirements for a merger, speak more broadly to like the life cycle, and point out that the two sort of like pink phases here are really what the focus of this discussion are, and they're part of a much longer timeline, as many of you have lived experience with this and or getting up to speed. Many credit unions are in the exploratory phase. They may be simply defining. Phase one is sort of like, do we even want to be involved in inorganic growth? We might be passive, we may be proactive, we may be not interested whatsoever and very heads down on our organic growth plan. All of those things are fine. After that, if you do have a strategy, you may be seeking to have discussions with other potential partners to see if there is a fit there, and really and if you do have engagement, seeking to really understand what is the business case in particular to your members. How is the combination of those two credit unions going to provide an outsized benefit to one or both of those memberships, kind of depending on what the structure of the partnership looks like. If that's still feeling generally positive, then then the lawyers get involved, and you may enter into a letter like due diligence and a letter of intent, bring in your CPA firm, and really start to outline the legal structure of the deal, and heading into what is called a merger agreement. The merger agreement really is the binding agreement of how you're going to consummate this partnership, and what the initial partnership is going to look like in terms of board seats, potentially like name and brand, the leadership team, and any sort of key considerations around who will be the CEO, and which branches and what staff will continue to be retained. Very important parts of both the identification, fit, and the mutual diligence and structuring. Once you have a merger application, or when you're very close to having one, you start to think about actual regulatory approval, and that's what we'll be focused on again today. So we really break that out into two distinct phases, but are part of some sort of the same process. The first is really getting regulatory approval, whether we're focused on the NCUA today, but if you are a state chartered credit union, or you're merging with a state chartered credit union or a federal credit union, you will also have to keep the state apprised in some fashion. Part of the regulatory review process is then them giving you the go ahead to actually hold a member vote, and so then the second piece is that member vote and getting approval from the merging in credit union's membership. And then should you get that approval, you can really close that out, and then really get to work on integrating two organizations to be one, and making sure that you're combining both your sort of physical infrastructure, your human capital infrastructure, your cultures, your brands, et cetera, which is really sort of like the long tail of the integration, depending on the size of both institutions and other various factors. So did want to also, for those of you that maybe new to mergers, wanted to highlight the broader life cycle. Again, we're going to be talking about just the regulatory approval process, specifically the NCUA. I did want to put this slide up front. I can't talk about the regulatory approval process for 40 plus state chartered credit unions in one slide or in a 30-minute webinar, but the one deviation here is that if you are federally insured, you have to get NCUA approval. So that is evergreen for all but about 100 credit unions in the country that have private insurance and are state chartered. For the rest of us, we have to deal with the NCUA, and if we're state chartered, really what that involves is making sure that you read their regs, and just in our experience, making sure in your project plan you also incorporate the key pieces where you want them involved, and make sure that you get the necessary approvals. Oftentimes, just making sure that the communication lines are open, and that when you submit to the NCUA, oftentimes they'll want you to submit to the state. If there's any additional data points or pieces that your state regulators require, make sure you build them into your project plan. I'll say from my experience, it is one additional party and one additional piece, but it doesn't. It's not sort of like two times the work in my experience. A lot of the requirements are often very similar, and it's just making sure that you're following and integrating their playbook with the NCUA's playbook. So if you are curious about that, or you want to talk about a specific state, please feel free to reach out. We can dive into that more, but did want to flag that before just focusing on the NCUA requirements here. What are the NCUA requirements? They are all of the things on this list here. Again, we won't go into really explicit detail on that. I do want to flip quickly to the appendix, and you'll see that I included all of these things with a description in them, as well as a link or to either the form, if it's a form itself, or another resource you can use. There's also the code itself, which we can point you to and is very helpful. We categorize it into sort of like four general buckets. First is the field of membership overlap. I'm actually going to talk about that next, so I won't go into it here. You do need to give them a detailed explanation or the reason for the merger. Most often, that will be something that you already have because of the previous phases. And so, this isn't necessarily like additive in terms of the regulatory approval. It's really summarizing, what is the reason for merging. The NCUA does have standard categories as well. Sometimes credit unions will merge for succession planning or poor financial condition, even if it's not, quote, emergency merger. So you need to sort of tell the regulator why you're merging. Then there are forms. They're simply that, you follow the form and you fill them out appropriately. As you can see, many of them are the formal approval process, just documenting that your board did vote to pass and sort of agree with the merger on both sides of it, not just the merging in credit union, but also the continuing credit union. You also show that there's a merger agreement. Eventually, you do certify that vote. So that was in that sort of like secondary phase. This is not something you would submit initially, but once you do hold the member vote, you do fill out an official form certifying to the results of the vote and having your key personnel sign off on and attest to that vote and how it happened. You do have to actually certify the completion of the merger at the very end. That's form 6309, excuse me. And then there are some financial forms as well. So the asset share ratio computation form, you have to speak to any financial related or merger-related financial arrangements. Really, this is the key personnel and retention, and those that are above a certain threshold need to be disclosed if they are tied specifically to the merger. So that is a key piece of both the forms, but also what you would include in your member notice or your member ballot. So that's not just needed for the NCUA's purposes, but you need to speak to that to your actual members as well. And then the ballot itself and the notice, they want to make sure that both of those follow their criteria. There are formatting criteria and both as well as substance criteria. So you do need to include certain things within those. And so the NCUA wants to, before you go to your membership, they want to understandably make sure that you do it in a way that aligns with their requirements. And so that is part of the merger application. Finally, there's narrative components as well. Some of these are, I won't read through them. A lot of them are simply like pulling financial reports, specifying your timeline and your deadline, speaking to the consolidated financials and any adjustments or mark-to-market items that your CPAs may have found that may change, the nature, excuse me, of the combined entity. Yeah, there is, as I mentioned before, if there is a state charter, you do need to document, their approval at some point or their awareness. And so again, that communicating between the two regulators is very important. Indicating that you have insurance and you have proof of insurance. Some of this is, somewhat standard due diligence for the NCUA. And then, some items are, just reiterating like your branch footprint, how members are going to be served and testifying and sort of making sure that if there's any branch closures or changes to service that, they're also checking that as well. So again, like this is a very cursory high level overview. There's a lot on this slide. Can't get into all of it, but do have some appendix here. And if there are questions about how to fill a certain form out or, just key assumptions when you're getting into like the narrative, which is a little more open-ended, happy to help out and hope that the resources provided in the back of this PowerPoint are helpful. And if not, happy to talk more about it. The final piece I wanted to mention today, and I want to wrap up in about 5 minutes to leave some time for questions, is that field of membership piece and compatibility. This is something that we find a lot of credit unions will come to us with support on because you might be in neighboring towns or adjacent states, or not even adjacent states, but sort of you may already agree that that a potential combination makes sense, but in order to effectuate the merger, you need to have what is called field of membership compatibility. The NCUA has a pretty helpful resource for this. It's I call it a crosswalk, but I've broken it out into 3 slides here. It is actually like one PDF. But this is an important consideration if you're getting a little bit deeper into merger planning and you're getting past the like, does this make sense? Can we, do we think our members will actually benefit from a merger? And if so, then how do we how do we effectuate it? So the key piece here is looking at the left side, and this stands for merging credit union is a single common bond. So this slide is, again, for merging in single common bonds to either a multiple common bond or a community charter. And then, is very helpful, but it gives like the key criteria that must be met under any scenario. And so, for an example is a single common bond can merge into a multiple common bond if their group has less than 3,000 primary potential members. So this is a helpful resource just as you're trying to assess the potential fit and whether you might need a charter change or to change up your field of membership to effectuate the merger. For multiple common bonds, those are really the most flexible charter for mergers, both in terms of being able to merge in single common bonds, other multiple common bonds, and then potentially communities if you have what are called underserved areas, which are serve as community footprints. Sometimes you can merge in a community charter without them having to change charter. So you can see that flexibility is indicated by more opportunity on all these boxes here, and really would involve somewhat of a more detailed assessment of which of these criteria you meet. Community is a little more restricted. If you are merging with another community chartered credit union, the big takeaway that I try to tell community charters if they're thinking about mergers is that if I think about it as a Venn diagram, if you think about your community as a sort of blob, then the merging in credit union either has to be the same or sort of within that community charter. So that's what is spoken to here. If it's a multiple common bond, you can have other pathways as well. So yeah, some of these aren't necessarily alignment. I would just call out like converting is really just changing your charter. So I don't know that this is some of these are really finding alignment so much as yeah, converting your charter. But this is a really important key consideration, probably in the second or third phase of a merger, and wanted to make sure I highlighted that before I wrapped up my formal remarks here. That is everything that I wanted to go over just in terms of the process. Ben and those that are on the call wanted to make sure that we had about 10 minutes for any Q&A.
Not seeing any questions coming through the chat or the Q&A section quite yet. We'll give folks a little bit of time to digest some of the information that you've already shared here. As we think about these conversations that we're having across, we work with over 300 clients across the country. A resounding topic that comes up in this particular conversation is, how do we work with our board? So any thoughts on or tips around kind of like bringing the board through this process and working with your credit union's board through a potential merger?
Yeah, I think I would agree. Like that comes up a fair bit, and every credit union is different, every board is different, especially if you have folks who are new members of the board. Like so many board thing, education is key. And so oftentimes for credit unions who are just really looking to have a perspective and be somewhat proactive, what I'll often do is come in and just speak to the state of mergers, sort of like how mergers come about in credit unions. I think like if for individuals who are new to the credit union industry, like this is not mergers and acquisitions like Wall Street. That's not what mergers are in credit unions. So I think sort of like starting out from an educational approach and sort of like talking about not just like what they are and how they happen, but also like what the history of them has been, and then maybe like most importantly, like what the financial impact is or could be potentially, just so that they have a frame of reference. And then I think some of the most prepared credit unions that I speak to sometimes is a function of strategic planning, whether it's the board pushing on the executive team or the other way around. We'll have sometimes like a board approved strategy, which I think can be very helpful in even if you have a sort of like, we're going to be passive about mergers, I think it can help mitigate the risk of mergers shifting both the board and the executive team's attention away from just your day-to-day business and organic growth, and allow you to quickly get to a yes or a no, whether you want to focus on a potential opportunity or not. And so I would say if you want to take it one step further beyond educating your board around the topic, I would say, it might be worth having a sort of like potential like board pre-approved strategy, or sort of like this is what our consensus or our position is. Maybe memorializing that, revisiting it, every year or two, to see if things have changed either in your perspective or the condition or of your institution or the market generally. But yeah, I think those would be, been my two sort of like recommendations, just as a way of being like proactive and ready.
And just so everyone knows, we did also kind of just drop the meeting link in the chat. I know that some of these conversations and questions that you might have might be a bit sensitive or close to the credit union. So again, happy to help answer questions offline, whether via email or, of course, if you'd like to jump on a quick meeting with us as well. Another common question that we're getting from credit unions, and a topic that I feel like I'm seeing more and more so over the past handful of years here, is bank acquisitions. I know it's really not like what we're into at CU Collaborate, but any commentary that you have on either process differentiation or expectations around the process as it pertains to like acquiring a bank?
Yeah, no, I think it's we have services at CU Collaborate that are kind of like necessary or helpful for potential bank acquisitions. So like one key consideration there is, how do you memorize the bank customers, because they may not fit in your field of membership. And so there's it's just it's a different type of merger or acquisition, really. So the key consideration is, yeah, like the regulatory approval process will be different than what was posted here. How you actually effectuate the transaction in terms of like bringing the bank customers over is a key consideration. Sort of like memorizing them and what regulatory designations you might need to do that is important. And then bank deals are cash deals, and so that's a key. There is money that there is things that need to be paid for in a traditional credit union to credit union merger, but you don't actually have to go and take a huge, or potentially large cash part of your net worth really to buy a bank acquisition. And so that's another important consideration. And so yeah, we work alongside a lot of attorneys and folks who can be helpful there. If that is part of your strategy, it doesn't have to be buying a huge bank. It could be buying a bank branch. Similarly, something I didn't speak to is, credit union branch acquisitions can happen as well. You don't see it as frequently, but it is a thing that can happen. So there's sort of subsets of broader sort of, I'll call it M&A, that we didn't focus on here.
Sure, you probably saw this, Chris. We do have a kind of a comment question coming through the chat here. And we may need a little bit of clarification here as we're talking both about credit union mergers and also bank acquisitions. But the question coming through is, please provide an approximate timeline for the process start to finish. We want to make sure that our expectations are realistic. And then there was a follow-up question there as well, which is, do you have any suggestions for selling a merger to your members? What point should we emphasize so that existing members are comfortable with this change?
Yeah, thanks. Those are really awesome questions. The timeline one is the hardest question we get because it's sort of, I won't totally balk at it, but I'll just speak to the regulatory process and sort of like, I would say generally speaking, it takes about a month or two to get your regulatory package in order. The NCU, it goes to the regional office, although the headquarter function cure does have a review for compatibility. So there's sort of like two parts of the NCUA that are involved in the review. Of course, then there's the sort of like notice period for the vote, which is just it's going to be anywhere from 45 to 90 days. So I would consider the regulatory application and approval process to generally take anywhere between, 5 to 7 months, and I'm baking in the member vote and process in there as well. So, and then, the harder question is, phase 1 to phase 5 in terms of legal day one. You might be looking at potentially a year. It just depends on how quickly you can get your leadership teams and your boards to, get through the sort of diligence and merger agreement process and all get on the same page. And then the integration and value realization, that's really the long tail of, if you need to bring the cores together or do core contract conversions, like that can take, as long as, in the largest, credit unions in the country merging, it's probably a multi-year process until they feel like they're really operating as one unit. And there's a long tail there, but that could, I would just say like potentially anywhere from 6 to 8 to 18 to 2 months to 24 months, just depending on how, what you're calling done. So hopefully that gives you a general idea. We could be more specific if we knew, we have more specific project plans. So hopefully I'm giving just like a decent enough general guidance. But if you want to reach out, we can speak more specifically to each of the phases and the key considerations. In terms of selling it to your members, I think like this is one thing that we're pretty passionate about here at CU Collaborate, is not just like mergers for the sake of mergers, but really focusing on our not-for-profit mission and really like focusing on our fiduciary duty to member value. And so we strongly believe that, in addition to saying like, hey, yeah, you're going to have more products and services and we're going to have scale and we're going to be able to sort of offer you a better experience. Like really what we should also be doing as credit unions are articulating how much money a credit union member will have on average per year as a function of the merger. And if that's a negative number, you shouldn't do the merger, basically. Like your members shouldn't be able to, shouldn't have a worse product and service suite or not be able to get the loan that they got today, not because of interest rate changes, but it's just because like the institution that you're merging into doesn't serve that type of member in the way that you serve that type of member. And so, in terms of like how you position it to your members, I would say it should also be how you position it to yourselves and to your board as part of the decision-making process, and really being very clear about, what the benefit to the member is, and then sharing that very transparently with them. And that should really, ideally get everybody on the same page as to like what we're trying to do here as both a, single credit union and as a movement. So yeah, that's what I would say about that.
All right, I know we're getting very close to time here, but we do have another kind of couple questions coming through the chat here. Any opinion on issues to considering including in a board governance policy to assist with board integration and board culture? In addition to that, any opinion on when in the process to bring the regulators into the loop?
Ooh, both very good questions and hard to answer. We might need to follow up with a one-on-one there. My opinion in terms of like board governance policy and like board integration, if I'm understanding the question right, is sort of just like, have one or sort of work to find the best ways to integrate them. I think like a big challenge can be sort of like term limits and what a lot of credit unions will do to accommodate the governance is sort of like increase the board size and then potentially attrit over time back to what may be more of like a standard board size over time. And so if I'm understanding that integration plan, I think just like having one is important as part of really the upfront discussions and sort of like how that's going to happen and both agreeing to that as part of the merger agreement or letter of intent. The board culture thing that's like a big topic. I mean, culture is not just important to the board, but both credit unions and the leadership teams. And it comes up in most conversations I have. People have different definitions of culture. And I think there's a lot of different like business frameworks that we can use to same page, but ultimately like pulling forward those culture conversations are most likely to result in whether it's at the board governance level or generally the organization itself, like maybe uncomfortable situations or truths that become sort of like not ideal for the potential merger and may result in you not merging, but that's really important and ultimately a good thing. And so, I don't have like a real strong opinion over like one cultural assessment versus another, just that they should be something that is considered as part of your diligence. When to bring the regulators into the loop? I feel like this is also a really good question, but it's highly dependent on what your relationship is with your regulator and what the key considerations of the potential merger are. I know credit unions that have very good relationships with their examiners and use them almost as like pseudo consultants or mentors in some instances, and some have a very different relationship with their regulators, and then they're on a sort of like need to know basis. I often find that hopefully it's either neutral or a positive relationship, and I think giving them a heads up earlier can often have you have a faster review and approval process timeline. It may expedite your exam cycle, and so it depends. But I rarely feel as though it's a bad idea to not at least give them an FYI or a courtesy. It may change the way when they come in to exam you, or they may pick up your package and be ready for it and be able to expedite it. So I think there's a lot of potential positives to at least giving them the heads up while you're still considering it prior to the official application submission. And it's a really good question.
Well, thanks everyone. Appreciate the comments and questions coming through the chat. I want to be cognizant of everyone's time here. Chris, anything you want to leave the group with?
I think we covered a lot. I appreciate the questions, and like I said, we're always happy to chat through some of these things, whether we end up working together or not. Want to be a force for good, and again, sort of like mergers focusing on the member benefit is really important for us to just make sure that we're doing right by our members and continuing to position the industry for success generally in the broader marketplace. So. Yeah.
Stay tuned for a follow-up email with recording, slides, and further resources. And again, if you'd like to discuss and or take any questions offline, as Chris mentioned, don't hesitate to reach out. Thanks, everyone. Have a wonderful rest of your day. We'll talk soon.
Thank you.